Today, we will talk about capital, definition, how it's used, structure, and types in business. Capital is a broad term that can describe anything that confers value or benefit to its owners, such as a factory and its machinery, intellectual property like patents, or the financial assets of a business or an individual. From an economic perspective, capital is vital to the functioning of any unit, whether it's a family, a small business, a large corporation, or an entire economy. Capital assets can be found on the current or long-term portion of the balance sheet. Capital is typically cash or liquid assets being held or obtained for expenditures. Capital is used by companies to pay for the ongoing production of goods and services to create profit. Companies use their capital to invest in all kinds of things to create value. At the national and global levels, financial capital is analyzed by economists to understand how it is influencing economic growth. A company's balance sheet provides for metric analysis of a capital structure, which is split among assets, liabilities, and equity. The mix defines the structure. Debt financing represents a cash capital asset that must be repaid over time through scheduled liabilities. Equity financing, meaning the sale of stock shares, provides cash capital that is also reported in the equity portion of the balance sheet. A business can acquire capital by borrowing. This is debt capital, and it can be obtained through private or government sources. For small businesses starting on a shoestring, sources of capital may include friends and family, online lenders, credit card companies, and federal loan programs. Equity capital can come in several forms. Typically, distinctions are made between private equity, public equity, and real estate equity. When an individual investor buys shares of stock, they are providing equity capital to a company. A company's working capital is its liquid capital assets available for fulfilling daily obligations. It is calculated through two assessments to measure a company's short-term liquidity, representing its ability to cover its debts, accounts payable, and other obligations that are due within 1 year. Trading capital is the amount of money allotted to an individual or a firm to buy and sell various securities. Investors may attempt to add to their trading capital by employing a variety of trade optimization methods. At its core, capital is money. However, for financial and business purposes, capital is typically viewed from the perspective of current operations and investments in the future. To an economist, capital usually means liquid assets. In other words, it's cash in hand that is available for spending, whether on day-to-day necessities or long-term projects. On a global scale, capital is all of the money that is currently in circulation, being exchanged for day-to-day necessities or longer-term wants. The capital of a business is the money it has available to fund its day-to-day operations and to bankroll its expansion for the future. The proceeds of its business are one source of capital. Any financial asset that is being used may be capital. The contents of a bank account, the proceeds of a sale of stock shares, or the proceeds of a bond issue all are examples. The proceeds of a business's current operations go onto its balance sheet as capital. Most businesses distinguish between working capital, equity capital, and debt capital, although they overlap. Here are 5 key takeaways. 1. The capital of a business is the money it has available to pay for its day-to-day operations and to fund its future growth. 2. The 4 major types of capital include working capital, debt, equity, and trading capital. Trading capital is used by brokerages and other financial institutions. 3. Any debt capital is offset by a debt liability on the balance sheet. 4. The capital structure of a company determines what mix of these types of capital it uses to fund its business. 5. Economists look at the capital of a family, a business, or an entire economy to evaluate how efficiently it is using its resources. Hope this would help. Thanks for watching.